So already trading with the small accounts can be very risky, right? If you have a, small account, this is what I would recommend you not doing. And that will be holding trades. Swing trading, meaning trading for multiple hours. Like you put a position on and you're looking to sit in it, and you're looking at a higher time frame chart and you're trading directly from that chart, and you want to trade and hold a trade to maybe a swing high or a swing low. If you get a small account, that's going to be almost impossible to do, because the market does what? It makes moves to where it's either swinging and making higher highs and higher lows, and it's going to have a nice pullback before it actually breaks higher and breaks structure back to the upside, and you're aiming for maybe a swing high to be taken out, or inverse of if the market is moving in the opposite direction. So I do not recommend anyone out there holding trades and trying to swing trade in the future markets, or in particular any particular market, if you have such limited amount of funds or capital. Scalping is your best bet. I'm going to say that right now. It is the quickest way to grow a small account, especially someone that has just a few $100s or a few $1,000 and you are a beginner trader. Okay. Why? The purpose why I believe so much in scalping is because, especially with a fluid market, like the NASDAQ futures, or maybe even the Dow, one that has good movement, even though they're fast-paced moving markets, they provide multiple setups. Again, I talk about here on my channel that you really only need 1 to 2 quality setups a day. Now, I will also say this. Start with the micro future markets if you are, a beginner trader with a small account, just starting out. Even if you are more experienced, say, and you understand the concept or the strategy, in particular, maybe how I trade, or you have your own trading strategy, still, the micros is a good way to build an account for anyone that's just starting off in the business or industry of wanting to scalp or trade the future markets. Okay, I'm going to show you just as an example the number of opportunities, let's say on the NASDAQ, that you could possibly take in just one particular trading session. All right. Again, I want to say this. I believe there's a greater measure of being able to control your risk if you have a solid strategy. And I talk about that here on my channel across multiple videos. So please spend some time watching it. It may be a great strategy that works for you, for anyone that's in search of one. But you also want to have a strategic trading plan set up, which is basically a guideline, or a rule-based standard in which you want to hold yourself accountable for, saying that if I have these 4 or 5 items or more in my trading plan, I want to stick to that. I do not want to, overtrade. I don't want to take more than 2 trades a day. Okay. I want to stick within the time periods in which I want to trade the future markets like the NASDAQ. Okay. Now, growth and growing a small account. I've talked about that again multiple times on this channel. I even talk about the 5 to 6% rule and how to grow a small account. But I truly believe that, starting with the micro futures, if you are a beginner trader, is the best means. I'm going to show you just again, like here in just one trading session, the number of opportunities in which you could have, scalp, say for example, the NASDAQ futures. And we'll look at yesterday's session in particular. Most traders will say, especially if you trade like a thicker market like say the E-mini S&P 500, you maybe want to get one setup a day. Okay. Just depending on which charts you're trading from. Okay. If you're using smaller time frame charts, trading off a 1-minute chart, or, for me, like just trading strictly off like a 12 range chart, then you may get a couple of more setups a day, just depending. But that is a thicker market, and it moves a lot slower than some of the faster paced markets like the NASDAQ and the Dow, even the Russell. Okay. I'm an equities trader. I like trading those indice markets out there when it comes to trading futures, and that's what I stick with. All right. Now, especially during the New York session. Okay. There are some great markets to trade during the overnight session. Globex, like gold for one, choose a commodity that also works, and that can work for you as well. But let's look at the market first, because the number one thing I want to talk about just as well is if you have a hard time depicting which way to trade. I know a lot of people probably do. They struggle with that. And a lot of people just look for pullbacks to key areas, whether it's a break and retest and a pullback to, say, for example, where the market made a higher low and broke here above this area of structure. They may take a retest back to basically, which is the neckline of this swing where it pushed higher and broke, a pullback here and to go long, right? I'm a supply and demand style trader, so I'll look for the pullback to key areas of aggressive buying and selling with the market broke structure. Okay, that is probably one of the most important things that I must see when I'm trading is to break a structure. But the number one thing that I need to see that's going to let me know which way to trade is which way is the structure. Okay, which way is the market breaking or pushing either to the upside or to the downside. This case here, we were bearish, but then the market started breaking structure. What do I mean, by breaking structure? Well, areas in which the market may, say for example, where it starts making fluid runs, highs, higher lows, and breaking structure above this area here. But a full-on reversal is going to be where the market's taking out, say, this area structure, and then taking out this area structure here. Pushing up, making a high, higher low, breaking higher. This is a reversal. We have inverse head and shoulder pattern right here, breaking higher. So I will look for a pullback to this key area of demand. Okay, that's in particularly how I trade. I love to take trades, especially where the market is reversing the first or the initial pullback to a key area of supply or demand. This case here, an area of demand, to take the trade going back to the upside. When the market gets too far away from where things really kicked off at or originated in the reversal back to, in reverse of what was going on here, bearish back to bullish, then when we start getting too far away and we have multiple gaps that need to be filled back to key areas or zones, where the market is basically gapping in between candles, and then the market like moves way up here somewhere, right? And you got swings, continuous swings to the upside. We have breaker structures, and then you have multiple gaps in between those candles. Be careful, because the further you get away from the origination point where the market reversed at, it can want to come back and pull back to start filling those areas in. Then it may want to continue pushing higher. Okay, so again, the strategy and how I trade, I like to use multi-chart confluence. I like to always, first and foremost, find the direction and get that correct using my 120 range chart. And then from there, I like to use a scaled down chart or a lower time frame chart like my 24 range. That's my entry chart. Okay, I'll look at that. Now, I'm just going to show you a couple examples here, because this is what marks the difference of becoming a scalper versus someone that's wanting to sit into a trade and start the swing trade. I do not recommend that if you are an inexperienced or beginner trader out there who's looking to want to grow an account. If you got $500 or $1,000 and you start off trading the micro futures and you start holding positions, the market's going to come back just about every single time and stop you out, and you're probably going to blow that little account very, very quick. The less risky route to me is trading, and trading is scalping. Okay, so for example, I'm going to show you a few here. There was a nice pullback to this key area of demand. I like the confluence here because I have a 120 range demand zone. If I scale down to a 60 range chart, so I'm using, say, 120, 60, and then a 12, well, then I can get to an opportunity to take a trade. The more confluence I have across multiple charts, that's the confluence I need to look for an opportunity to scalp going back to the upside. Not looking to hold it for, hours on end. Most of my trades I'm into are in and out between 3 to 5 minutes or less. Okay, sometimes in a matter of seconds. When the market is breaking structures, even here you see it. The blue box there, that's the 120 range demand zone. The red box, the 60 range, okay, demand zone. So in this case here, I could wait once it taps into those areas of demand, and both of these are high probability zones. What do I mean by that? Please watch the videos here on the channel. You can go to the home page, you can kind of query it and type in gaps or imbalances, and it's gonna populate some video content for you that you can watch, to where I break down and talk about imbalances back at the zone and what makes a high probability versus a low probability supply and demand setup. Okay, again, I'm here to make this content, and the reason why and purpose of why I do it is because I want to truly see people become profitable. All right, now let me say this before I move on right quick, because people always ask me, I see that you have a private community or a tier-based program that I can join. Yes, it's very inexpensive. It's only a few pennies on $1 a day. I think it's like 45 or 50 cents, depending on which tier you choose now, okay? You can choose to become a basic elite member, or you can choose to become an ultra elite member. What's the difference? Okay, it all depends on the tiers or in regards to the perks and rewards you want to receive. If you become a basic elite supporter or member as part of the community, what you receive is the trade breakdowns, the video playlist, and the market structure video. If you go with the ultra elite supporter tier, what you receive is everything from all two tiers above and the third tier. What you receive an additional to are the live recorded trading sessions, the market recap videos, the trade breakdown videos, the video playlist, and a great video covering market structure. Again, there are tons of those videos on there that you can go back and watch. The live recorded trading sessions and the market recap is something new that I started doing. So There are several videos on there already, and I continuously do them week to week, where I'm making multiple videos on those particular topics, especially the live recorded trading sessions, which have helped so many people out. The link for that is down in the description portion of the video, right below the Discord. If you're interested in joining the Discord, it is free. The link below that, it says Ultra Elite Supporter. If you want to become part of that private community, it's like, I think like 50 cents on a day, $14.99 a month. Again, you get all that additional video content, and that's where really, you know, the bread and butter or the sauce to everything kind of comes into the fold, and it's helped so many people out. I can't guarantee everything or anything because, look, the way that you may read the market could be completely different than I do, but I do my best in breaking down things in reference to structure, in reference to the strategy, in reference to trade breakdowns and what I'm looking at. It's like you're sitting next to me and you're getting, you know, kind of an education yourself surrounding how I personally trade, because that's what I'm sharing with you, is how I personally trade. Now, let's go back to here. Again, if you're interested, the link is down in the description. Let's go back here. There's a great opportunity right here. Why? Because it unfolded where we have a pullback to this key area of demand. Two means of high probability right there, all right, off of two different various charts. Now, what I'll do then, if I can't catch myself or take an opportunity where we have, if I scale down to like right here, to where there's a 24 range, what am I trying to say here? Supply zone, which there is, I believe, right here. I'm not sorry, not supply, but demand. Right here, this is low probability though. What I'll do is, if there's not a high probability demand zone resting on the inside of these two zones, again, multi-chart confluence, then what I'll do is I'll look for the market to start making bullish movement back to the upside on my entry chart at 24 range, because this is a pullback, and right now we're slightly bearish, or we are bearish on the 24 range because we started breaking structure lower. I'll look for the market to make high, higher, low, pull back, push up, break structure here and here. Now that puts us back in what? The direction to actually go long. So this is a high probability 24 range demand zone right here, and everything is within the actual 120, 60, and the 24 range area. So that with all that confluence there, then I go long. I'm going to mark this yellow for the 24 range chart, and that's enough confluence for across three different charts. That's going to let me know that I need to go long, right? Okay, so that's the opportunity. My stop loss is going to go back at the area where the market reacts at and rejects, coming back to the actual last zone, the 24 range zone. I'll put my stop below 20,853. Give myself 3 or 4 points breathing room right there. And the purpose of that is because what does the market do? If it's pushing up, it's going to pull back before it pushes higher. Okay, so I give myself 2 or 3 points on the back end where the rejection took place right here, so that I don't get stopped out in case, because sometimes they'll pull back and test this wick to wick, or take the tick at this area here. Why? Because they know people are entering the trades right here. Okay, they're not blind to that. The market makers are not dumb. Okay, and you have to understand that, because we want to trade with them and not against them. All right, if you're trying to trade against and be, you know, foolish enough to think that you can outwit them, then that's when you start to trade against the grain, and you're going to lose some money. Okay, especially with a small account. You're looking to grow. Okay, not take losses. All right, scalping is the best technique or strategy to be able to do so. Pull back to this key area of demand. I'm going long. Right after that, there was another setup that came right after that, directly off the 24 range. People always ask me, can you trade just directly off the lower time frame chart? Yes, you can, but as long as you're trading in the direction of the higher time frame market. The market's making highs, higher lows, pushes up. So we're breaking structure higher. Then we start to come back and reverse to the downside just to push back to the upside here. So we got bullish movement coming back down. We got a low here, make a low, lower high, breaking structure coming lower, and then we start breaking structure back to the upside on a pullback to this key area of demand. You can go long off that demand area right there. Another setup direct off the 24 range, following right behind this beautiful one where we have multi-chart confluence. So that's two setups back to back that you could have taken, and that would be enough, okay, to call it quits for the day. Again, I typically only trade 1 to 2 setups. If you are someone that's trading and you're profitable on your first setup, okay, then go ahead and close shop and do the same thing in repetition the next day after, and the next day after that. Okay, so that one was, say, at 9:58. After that, the market started making more higher highs and higher lows. Yep, you could have taken some, probably, you know, this was a demand zone here if you wanted to take that back to the upside. Then it pushed up, pulled back, slightly wicked out and broke below this area here. Then we started making higher highs and higher lows. Back to the upside here. Another demand zone, beautifully to take back to the upside. So that's what they are. Demand zones are pullbacks to key areas of aggressive buying and pulling back to the actual zone. So right there, just in that one trading session along in the New York session, there were 3 opportunities, okay, that you could have taken trades going long, because the overall direction of your higher time frame, you're moving with that, is bullish. So I'm looking for key pullbacks to areas of demand. If it was the market was bearish, I would be looking for inverse of to areas of supply to go short at those particular zones. So again, this is a great way to go about scalping using this just simple strategy on how I actually do it each and every day. And I don't need to swing trade and hold, for several hours into a session or stay in my trades for like 15 minutes or longer. Don't need it. This is a less riskier way of going about building capital and growing that account. So hopefully that makes sense to you guys. I wanted to share that with anyone out there that's kind of, on the internet searching, a great strategy, a better way to be able to trade and make money. Definitely do so if you're doing it on the micros, though. I would start off and recommend doing that at first. Again, swing trading is more risky and to me, if you are, especially someone that has less capital, smaller account, those that have larger size accounts, yes, I believe that, if you've been more experienced, you've been doing it for years, and you want to kind of, see something that you want to hold, nothing wrong with doing so. But for me, even I've been doing this for 15 plus years now. I just like being in my trades less than 3 to 5 minutes and getting out and looking for the next setup and be done. All right. So again, if you're interested in gathering more information, becoming, getting more video content surrounding the strategy and how I trade, where I break things down, where I show you examples of trade setups, same setups to where I go in. I've posted over on our Discord community. You get the breakdowns by becoming, a elite member. Okay. Whether you choose the elite membership supporter tier or the ultra elite tier. Okay. Again, the ultra elite is going to give you everything: the live recorded trading sessions, the market recap, the trade breakdowns, which are tons of those videos there, as well as the market structure video. So again, the link is down in the description portion of the video for anyone who's, those are always asking, and anyone that's a new viewer here on the channel today, and hopefully you've already become a subscriber. And if you haven't, please take the time to go ahead and sub by clicking that subscribe button down below. As well as make sure to turn your post notifications on by clicking the bell. But the link is down in the description portion of the video. Outside of that, guys, that's all I have. I hope everyone has a fabulous Memorial Day weekend. Be safe out there. And if you do me the biggest favor before you click off, make sure to click that like button, that thumbs up button for me. I greatly appreciate it. That it shows me some appreciation for the video content that I supply to you today. Again, this is a less stressful way of going about building up your actual small accounts. Okay? Take care.